Today it's going to be me, then my buddy Sterling, Dan, and David will be running the show. We are the mentors in the Funded Trader Academy, where we help traders to get funded and to stay funded. And each of us plays a little bit of a different role in the Funded Trader Academy. I'm doing my thing with the volume profile, teaching people how to trade with volume profile, intraday trades, as well as swing trading. Then there's Dan. He's doing order flow. He's our order flow expert. Then we have David here. He's the smart money guy. And then there's Sterling, who is doing the psychology, doing support, onboarding calls. He's making sure that everything is running smoothly and that everybody is happy. We've been running the Funded Trader Academy for over 1.5 years now. And I did the math, and during that time, we've done over 400 live rooms for our members. And, I think that it's not just the members who is learning new stuff there. We are also learning new stuff here, also trying to improve all the time. So today we wanted to meet with you guys, show you what we do, also have a little chat with you, answer your questions.
A lot of people tend to go about this the wrong way. They just focus in on strategy. And listen, we've all been there. Everybody here, everybody in this room, me, Dale, Sterling, Dan, everybody included. We all started the same way. We started with a dream, an idea that we wanted to become profitable traders, and we all went in about the same way. We were looking for information. Back when I started, I started in the late 90s. I've been doing this a long time. There was no YouTube. There was no courses. I had to buy a book. Luckily, I got a job with a hedge fund who started to teach me how to trade. But the biggest problem right now is just how to get started. And there is a big misconception out there, especially in the space, and this space has grown tremendously. And it's really grown tremendously in the past 2 years, ever since the FX companies started to not allow US citizens to trade FX prop firms anymore. That's when we've seen the absolute explosion of the futures prop firms. But with that, we've also seen an explosion of educators and gurus and influencers. And, the biggest problem I see right now is traders just going about this the wrong way, just focusing on a strategy, getting a course, finding something on a chart that they can, identify and then just trade. If you think about opening up a business, you would never treat a business that way. Okay. Businesses have steps, they have procedures. First you have to have an idea. You have to validate that idea. Then you have to incorporate your business. You have to make a business plan. You have to find space for your business. You have to find employees. You've got to set everything up. And only after you validated it and everything is set up properly, then you can go into business and start accepting customers, maybe even make an investment. Well, traders go about it the wrong way. They go right to the opening the doors phase, and especially now with prop firms, and they don't take the time to build their business. They don't take the time to put structure. They don't take the time to validate anything that they do. And this is why 95% of people fail because they're putting the cart before the horse. Okay. And when we started the Funded Trader Academy, it was all about making this a four-step process instead of that one-step process, which is go through YouTube, learn, find a strategy. This doesn't work, go on to another one. There just has to be more. Okay. And with the Funded Trader Academy, that four-step process includes first building structure and business policies before you even learn the strategy. Because without having that set up properly, the strategy is not going to matter. You're not going to succeed. Something is going to happen at some point without organization or structure, no matter how good a trader you are, that is going to fail you. Okay. Because that's what happens in regular business. Okay. Now, if you take a business structure and process and put it together, and then you learn a strategy, okay, that strategy is the product or service for your business. Now you have something that you can kind of go to war with. Now you've got something. You've got a good product, you've got a structure, Okay, now you can start thinking about monetizing your business or going into business, but the only thing left to do now is to validate it. And that's why, going back to what Sterling said about journaling, if you are not journaling or willing to journal, don't even bother. Don't even bother doing this because your chances of success will be minimal. And the reason is that if you look at any business, okay, every business keeps books and records. They have to because that's the only way they measure their business. They don't just do it because they have to file taxes. They do that so they can measure their business so they can keep track of sales, revenues, how much money that they're spending. They can analyze that data to make it better. And everybody needs to do this. Okay? Drug dealers, okay, keep books and records. Bookies, legal businesses keep books and records. Okay, they have to because that's the way to run a business. So the first thing you need to do is just come to that realization and just understand that this is a business and I'm going to start it as a business. I'm going to build it as a business and I'm going to do everything for trading as if it's a business. And if you at least do that, I promise you your chances of success will rise exponentially. Okay. And we're going to help you through that process by making it a four-step process, by teaching you how to put those process and structure around you. How do we do that? We put you in front and alongside people like myself, Dale, Dan, and Sterling who have already been through it. We've already failed, so you do not have to. I know that's some phrase. I know you've heard that before, but it's true. Okay. I spent 5 years when I first started. I had no idea what I was doing. Okay. And what got me profitable was finally kind of finding something that resonated with me and finding something that actually worked. And that was actually volume profile. And that's why I love volume profile. I think it's an excellent way to get started. Dale is the best at teaching it. His courses are second to none. And his methodology of doing that is something that can get you profitable right away. All right. Then after we do that, we graduate into other things and we talked about smart money concepts. Smart money concepts to me is the most important. And let's put aside the term smart money concepts for a second because that's really just a new term, formulated by ICT and new influencers. These concepts that we trade have been around for decades. Volume profile, market profile started in the 80s. This is not new terminology. This is not new stuff. Smart money concepts has always been around. Fair value gaps have always been around. Liquidity sweeps, all this stuff. There's a lot of new terms that have come, but these concepts have been around for years. What we try and do here is to simplify those concepts for you so you can actually develop a business where instead of going out to YouTube and just absorbing all the information and going from shiny new object to shiny new object, we're going to simplify all that for you. Okay. And the only thing that we're going to tell you, and it's the truth, is that if you follow these steps, okay, you have a very good chance of succeeding. The only thing is that you need to understand is that this is going to be hard and it's going to take time. And no one else is going to tell you that. But since we tell you that, that's the reason why you're going to succeed. Because if you come in and accept that, you're going to put yourself in a much better position. Okay. We have people, and I'm sure there's a lot of people here who constantly are taking evaluations. Okay. You're trying to get funded. Great. Once you get funded, then what? Have you ever validated what you do? Have you ever made money? Have you ever shown success? Do you have any process, any structure? Most people don't. So we're going to teach you how to put that all together. So by the time that you do get funded, we're going to be able to direct you to the proper place. We're going to help you through the evaluation process. Okay. And if you're actually ready and you have data to back up that you are ready, your evaluation process is going to go a lot smoother. And once you do that, you're going to get a funded account. And this part of the program and being a trader is actually the hardest. It's after you pass an eval and now you're funded. Now you have to establish yourself as a trader, meaning establish income, establish some type of baseline, AKA get paid. Most people, 85% of people who get funded never even get a payout. Start to get paid, establish a baseline of income, validate that what you did in the eval was right and what your data in your journal said was right. And after you take a couple of payouts, two, three payouts, I mean, you go to a company, I mean, listen, I mentioned Apex, anything, you get each payout, three payouts, all of a sudden, 2,000, 2,000, 2,000. That's $6,000. It's not a lot of money, but you know what it does? It now reimburses you for all the money that you've ever spent or any wasted on courses that never worked out, pays for your education here at Trader Dale, and then possibly even starts you to be able to have money to now scale up your business, which is the easiest part of this business because once you establish yourself, you just need to add capital. Okay. Now, what type of trader are you going to be? Do you have to be the best trader out there? No, I'm not the best trader out there, not by any means. You need to carve out something that's consistent. I saw somebody ask a little while ago, what's the average, return or what's the average, win percentage? That's not a viable statistic, okay? Because I take three traders. If trader A makes 2% a month, trader B makes 4%, trader C makes 6% a month on average. I consider those all profitable, consistent traders. And even the guy at 2%, he can scale that. If he's trading $1 million worth of capital and he's making 2%, he's going to be making more money than the guy trading $200,000 worth of capital doing 6%. So it's not about, knocking the cover off the ball. And for you non-US citizens, I'm sorry, I always get my head chopped off when I talk baseball and football, and the Europeans don't understand my analogies. But you don't have to be perfect. You have to be consistent. That's it. And if you're consistent at anything, you can scale that. And the prop firms allow us to leverage capital where we have working capital and cash flow for our business, which is something you never have to worry about. 70% of the businesses that fail in the United States do not fail on merit. They don't have cash flow. They can't keep cash flow or lack of cash flow or a lack of investment capital. Here, you never have to worry about it. So in what other business can you start a business, create a product, fund your product, all for way less than $5,000? It doesn't exist. You just need to work hard and you need to understand that it takes time. And if you go through the process like we have it set up, and it's going to be hard in the beginning and a little tedious, but when you come out the other end, you're going to be much better off and you're going to be able to do it at a much faster pace.
Happy to be here, guys. Appreciate you guys all showing up. So, one thing that I want to just share with you guys real quick. One of the benefits I see from the most part from the FTA members is exactly what David and Sterling have been talking about, that change and that shift in psychology. We can see that happening over and over with traders. But let me just share my screen here real quick with you. Um, this is my entire trading platform right here. This is my execution chart. This is exactly what I trade off of each and every day. I'm fusing together two things. I'm fusing together the order flow footprint, and I'm fusing together the volume profile, and I infuse a little bit of smart money concepts in the broader markets like this. But back to David's point, one of the biggest things that I've seen in FTA is that shift in the traders that come into play. They're coming in brand new as I was 10 years ago, making all the same mistakes I made 10 years ago. Every single one of them. I can see it happening. I can see it doing. And one of the best things that I've seen come out of this program from a trader perspective is it's a program that I wish existed 10 years ago that I would have loved to have joined because it would have saved me a lot of money, would have saved me a lot of capital and a lot of mistakes and pain. As you see folks coming in with no plan. They've got they're shiny candle chasing, as I say in a lot of my sessions. They're looking at that next big candle. They're looking at that big delta drop, and they're chasing after it only to get stopped out. And so one of the things that you're going to see through this, once you develop your plan, once you develop your business model, and you kind of go through, and everybody, interprets price a little bit differently. They look for strategies that ring bells for them. How everybody interprets price is a little bit differently. But once you enshrine that and you package that into a game plan, Okay, now you come into a stage of trading where you're in learned restraint. And what I mean by that is when I came into trading, I had this thought for whatever reason. I came from the sales and distribution world, and that mentality in trading is a little bit of a slippery slope because in the sales and sales, marketing, and distribution side of industry, if you go into that, you think the more that you do, the more outcome, the more profits you're going to make. It's not the case in trading. It's actually the inverse. The higher quality setups you take, the better you follow your business plan. Like for today, for instance, this whole entire move shifted up. I took zero trades today. I found no entries today that I could live with. Didn't take a thing. And that's what you start to shift to um, through this program. Once you've established your business plan, once you've established your business model as to how you're going to attack the markets, and you have that, laminated and stamped on your desk, that's where the big shift comes into play. Whatever strategy it is that you like, whatever strategy it is that you're moving towards, that's somewhat irrelevant in terms of having that baseline foundation of having your capital requirements, having your business processes in place. So yeah, I don't really have much more to add to that other than the program does a nice job of taking somebody from an entry level or a mid level or a failing trader and puts you on the right path to being able to execute consistently in the marketplace. I've seen it numerous times, over and over again throughout this program. So,
Let's just talk about also broker statements because I don't just see this here. I see this all over the industry. I see YouTube every day, people sharing P&L, brokerage statements, telling people to show brokerage statements. Um, Let me tell you something. First of all, anybody could show you anything and doctor anything, especially in this day and age. Okay. I've been in the financial business for 30 years. Years ago, you were using, pen and ink and, different types of, ink blocker or something. And now you can fake or produce anything. Okay. It is illegal to show anybody any type of P&L, any type of brokerage statements without any audited documents to back those up. Okay. And you need to be registered with financial institutions to do so. So anybody showing you any of that stuff is not only maybe not even be real, but they're not doing a legal process. My attitude is that we don't need to show you how much we make, okay, for you to believe that we can help you. Okay, we are going to show you how much we know and how hard we're going to work for you. And that's why people do business with us, not because we share brokerage statements, which we'll never do because they are illegal. Okay, and everything we do is in line with compliance, just like if we were an NFA or a CFTC registered member. So I just want to make sure that everybody understands that. Okay, and that's the reason why most reputable people will not show that stuff because they know it's not legal. Go watch any ICT video, and the first 5 minutes is huge disclaimers and everything. He doesn't give trading advice. He's not showing broker statements, but he understands the concept of how to do this right. So find people that do things right in this business, and I think you'll come out ahead. I really will.
I think a big thing that I've found just haven't been on the education side for so long is that one of the best traders I know, oddly enough, when I ran day trading Forex Live, one of the best traders I know, he just could not create profitable traders. And he's probably one of the best traders I know. And it's because a trader also has to be able to teach what they do. That's why when I look at this, post your success section, this isn't things we ask for. We don't ask people to leave a positive review on Trustpilot. Like, when you come down to our reviews, like these are things that people leave because that's the choice they're leaving. When they're leaving their success and the success they're having, this is the main point, right? Like, let's say a trader is making $10 million a month, but he has 1,000 students and he can't create a single profitable trader. Does that matter what he's making a month? What matters is when you come in, you see the students posting their success, their payouts over extended periods of time, not just one payout, but over many months, as some of these guys are doing. So Is it an easy path? No, but the big thing here is again what success is coming from the members because it doesn't matter what's in our bank account. What matters is are we able to grow yours? And especially for those of you guys that are members, the poster success sections are you guys are able to go through that. Like here's the poster success for the accelerator program which you guys also have access to. And, you see the same thing just over and over as fundings, payouts. And again, not an easy path, but a path that many people are walking and doing extremely well with. And there's a clear, process that we run to get you on that same path. So anyways, that's my pitch, if you will.
Chris, how do you teach students to be adaptable when it comes to changing market conditions? I don't believe market conditions ever change. I just think volatility changes. I can go back 20, 25 years on a chart and do the same thing I'm doing today. So I don't think market conditions change. I think volatility changes. Now you have different phases of market activity. You've got consolidation, okay, and then you have expansion. Well, actually, two phases. Um, but other than that, market conditions really don't change. You just have to understand what phase you're in, and you have to be able to adjust with volatility. I think that's the most important thing. No capital needed to trade. We leverage prop firms. They will fund an account. You take an evaluation for $50. You pass it. You have a $50,000 account. You make money on it. You get paid. There is no capital required. You just have to pay for an evaluation fee. There's no capital required. I know that sounds crazy, but yeah, the only investment, Chris, you need to make is your tuition here. That's it. And prop firm evals can work two ways. They can be really cheap, like $20, $30, and then maybe they'll charge you like an 85 activation fee. So basically you're talking about 70 to $125 all in for a $50,000 account. The key is it's not expensive. It gets expensive when you go right to funding and you don't know what you're doing, and 2 years later you're failing all these evals, and you're 5 grand in the hole.
The more you try to make good decisions, you only have so many good ones a day, and like the example I always give people um, is kind of like the extreme. Mark Zuckerberg used to just wear the same shirt every day, would have the exact same process every single day. Like, so there's no decision in that. So he could just make purely high level decisions. That's like an extreme example of how the brain functions. You do degrade over time. So really like, um, that's why just repeated high frequency trading is the most difficult, in my opinion, way of trading. So we don't really, you're not going to find that here. You're going to find more thought out processes and, specific entry styles that are, we're really trying to be more like a sniper rather than a machine gunner.
Yeah, I think most of us are typically taking anywhere from 0 to 4 to 5 trades a day. And I can tell you, the transition from when I became profitable is when I stopped doing 25, 30 trades a day and started focusing in on high quality setups versus quantity. And you're right. I mean, Sterling's exactly right on over time throughout the course of the day, you degrade and your decision making goes downhill a little bit, especially after you're 35 trades deep and you got a negative P&L.
Your head's feeling hot at that
Yeah.
point.
Regarding like how many trades you need to take and stuff like that, when I started like so many years back, I first became profitable with swing trades. And, I had maybe on average, maybe 1 or 2 trades per week. I mean, like, why do you need to chase like intraday trades? Why do you need to push the buttons every day? Like, the ultimate goal is not to trade, but to make money, right? And if you can make money by doing 1 trade per week, it's fine. That's actually my preferable method. And there are also a couple of questions, like people asking how many hours do they need to dedicate to this? And if you don't have the time to do a day trading, nobody's forcing you. Just do the swing trading. Like I've been swing trading for, wow, I don't know, 15 years now. And like it's still my favorite way of trading. So It's actually the best I have. Everybody's so interested in intraday trading. I don't get it. Like, it's so easy to just, dedicate it 1 hour per day or 30 minutes per day just to check the swings, check the daily charts. You don't need to go for 30-minute or hourly charts. You just check the daily charts, check the trades, what's going on, check the macro news, things to be careful about. And that's it. It's not a rocket science, just do swings.
I mean, in regards to position sizing, what you're asking is so dependent on the trader because in the beginning I tell everybody trade with one micro. I'm purely going to measure your profit and R factor. And then once we see average drawdown a trader's having, their risk reward, their win loss, then we can better gauge where you should be at for a specific risk per your account size. But yeah, in the beginning, I start people on one micro just to purely measure them in positive R factor. Only once they're positive there, then will we look to go to proper position sizing to actually look to start to grow the account. Because in the beginning, like if you can't produce a profit with one micro, there's no point in going to anything larger. So yeah, heavily dependent, and we work with everybody individually on that. Based on how their trading is going, trade frequency, drawdown potential, things of that nature.
Michael, you can't really do it on capital because if you have a $50,000 prop firm account and your drawdown is $2,500, you have a $2,500 account. You don't have a $50,000 account. That's how they get you. You don't have so if you even do 5 micros, all right, and you lose 200 and you lose 20 points, which is a reasonable stop on the NQ. That's $200. You just blew 10% of your drawdown capital on one trade. It doesn't work. You have to think about what your drawdown is. So that's why on a $50,000 account, each 50, I'm usually in the 2 to 3 micro range. That's it. Why not? You put 2 micros on. That's $4 a point. You make 50 points. That's what, $200? You have 10 Apex accounts. That's 2 grand, right? In a day. It's 10 grand a week. That's 40 grand a month. You don't need to size up. Be conservative. Hold on to your accounts that you worked so hard for. Believe me, once you have those funded accounts and you start building them, especially if you've lost them before, you're going to hold on to them pretty tight. And the way to do that is to be conservative. Sean, you only need a copy software when you get to have multiple accounts from multiple firms. It's not something you need to worry about right now, but yeah, that's something in the future.
Some are built in too, like Top Step has a very nice built in if somebody was at Top Step.
Yeah.
There's other, depending on the broker you like, but yeah, some have built in that are very easy to function as well.
Yeah. I always suggest your first eval, trade it like a funded account because you want to prove yourself that you can do it. So when you get to the funded account, nothing changes. But once you start making money, don't waste time on evals. You get an eval, risk 500 or even $1,000. Get it passed in a couple of days. You don't want to waste time or go to straight to funded. There's a lot of straight to funded options now. But yeah, once you start making money and you're funded, you don't want to waste time on evals. So full port the CPI numbers, whatever it takes to get capital.
There was a question about swing trades and about macro news affecting the swing trades. Macro news do affect swing trades, but you would need to quit your trades, multiple times per day if you just wanted to avoid macro news, completely. So the way I do it, I only quit the swings. I mean, like quit all those swing trading positions before news, which I called monster news. And the monster news are basically news which are directly related to rate decision. So that's basically something like FOMC or ECB rate decision and stuff like that. So only the biggest news that directly affect the rates. So I quit the swings and then re-enter them after the news. But I just, let my swing trading positions open during regular news. Yeah, they do move, but I found out that this method is profitable. This works for me, and I don't want to be, babysitting my swings all day long just because there's a couple of macro news during the day. So that's how I go about this. There was also a question about how we started with trading and how much time we spent on it, and if we were lonely. When I started, I dedicated all my time to trading, so it was like 15 hours per day, and I didn't really feel tired after 15 hours per day. I was young. That's one thing, but I was so into it that I didn't really need anything else. I was happy that I was able to sit in front of the computer the whole day and, focus just on trading. So that was how I started. Every person's obviously different. When I started, I was like, how old was I? I don't know, 16, 17, maybe. So I had a girlfriend, so I wasn't too lonely. She's now my wife, so all went well. Um, yeah, so that's how it went. I went, you know, all in basically. But I think that you don't really need to do that. We are here to help you with that, so you don't actually need to go all in like we probably all did. How did you guys start it? Did you also go all in when you started?
Oh yeah, it was like it was every weekend, every evening, all in, like just glued to my computer by myself, learning, as much as I could possibly learn on order flow, learning as much as I possibly could about candlesticks. And you get lost in YouTube, you pay for a few things here or there to go listen to some lectures and this and that, and it was total time consumption up front.
Yeah, and so many dead ends, right?
Oh yeah, totally. The all of it. I've tried them all, man. Bollinger Bands, VWAP, all the stuff. Everything. And
Yeah.
not to say that I'm not knocking them, but it just didn't work for me.
There, yeah, I think we all kind of had a similar start. Somebody asked who your mentor was. I can tell you, like, one of the big reasons I started a live room, ran my site for 12 years, was what turned my trading around is I met a guy named Tim Swanson who ran the forex diamonds room. It's not around anymore, but the guy was a nuclear engineer for the Navy, and he was just incredibly smart. But the thing that people like, what I'd never really failed, or what I always failed to realize, is like all the things outside of strategy that you learn just by being around profitable traders. Like, how did he handle
Totally.
a loss? How did he handle a series of losses? How did he handle a series of wins? How did he properly position size? How did he get himself to actually take a stop loss when a trade needed a stop? It's like all the things that you don't see. And so for me, it was a huge turning point. Like, I had been losing for 3, 4 years at that point, and that's what turned it around for me. It's why I went on to run a live room. It's why I'm a firm believer that live rooms are often, for a lot of people, they're like the missing thing that they need. They need some accountability. They need somebody they're meeting with every few weeks. They need to be in a room talking with these guys frequently, or catching the recordings, watching the reviews and previews. You just need, like anything, it's like you just need kind of constant exposure to it. And the live setting of FTA is a really nice way to get that done. It was a huge part in my trading, and again, that's why it's offered here.
Yeah, just to add to that, Sterling, one of the things that we do that I feel is unique is just our educational process. Forget the strategy and
Yeah.
forget the prop firm stuff. It's just the way we have it structured. If you look at the traditional educational process, you get a textbook, so you learn about concept and theory. You go into the class to work with a teacher in a lecture environment, and then you need Q&A time, you need feedback, you need mentoring. We do all three, and we do all three separately, which is the important thing. A lot of other courses will try and live trade, teach you and answer your questions in the same spot. That's overwhelming. So our live sessions are not conversational. We are giving our thoughts on the market. We are showing you how we process information during the live market. That's where people struggle. Okay, it's not there. It's not to ask questions. It's not to lecture or really teach that much. But we do that in separate sessions. Twice a week, we hold concept and theory sessions in our accelerator meetings that are part of the FTA, where we're out of the live environment. All we do is talk about and go over different concepts, theories, back testing, but in the face-to-face live environment, like a teacher. Okay, and then also we meet 3 times a week separately just for Q&A. That's your time. Come, ask questions. David, I took this trade. What did I do wrong? David, I took this trade. What did I do right? My psychology, prop firms, whatever you want to talk about, whatever you need feedback on. And what's good about those Q&As, your problem is usually most of the other people's problems too. So everybody's interested in your questions and everybody else's questions. But that's your time to get your feedback. You're going to find that we're very accessible. And it's just the way we've structured this that it's been successful. And I think that's the biggest aspect of what we do well is our structure. And I think that's what's making people successful because everybody can take a course. Everybody can attend just a live room, right? Everybody can watch a video. So it's about how you go about it. I tell you one thing, and I'm probably old enough to have kids age enough to do it. Teach your kids how to do this. The kids are good at this because they treat it like a video game. They don't have any emotions, and half of them are living in their parents' house. They have no money issues. They don't have family. They don't have kids. I've got 2 kids in college. I have a mortgage. I have bills. They have no worries in the world. That's why they're making money. They understand the visual aspect of it, and they've eliminated the urgency, and there's no accountability. You know, but teach your kids how to do
Yep.
this because this is a great skill to have when they graduate college, just to have it, just to have it.
Yep, very true.